All right, tech enthusiasts and savvy investors, buckle up. Today, we're tackling the red-hot AI chip market. Is it a legitimate gold rush fueled by insatiable demand, or are we watching a bubble inflate before our very eyes? Think about it. AI is everywhere, from your phone to self-driving cars, and all that AI needs one thing: powerful chips. But can this unprecedented growth continue? That's the billion-dollar question we're dissecting today. Let's dive in. First, a little something that might seem unrelated, but trust me, it's crucial. Ever seen this message? Access denied. Suspected use of automation tools? It's happening more and more. Websites are cracking down on bots and web scraping. Now, why should you care? Well, it highlights a critical tension in the AI age: the battle for data. AI thrives on data, and companies are fiercely protecting theirs. This seemingly minor inconvenience is a symptom of a much larger trend: the increasing difficulty of accessing the raw material that fuels the AI revolution. What happens when AI models don't have the data they need to train? What if the data they are trained on is biased? It's a serious concern that can affect AI development and business. It also may be illegal. So, who feels the pinch immediately? Legitimate researchers, data analysts, price comparison sites, anyone relying on web scraping. Imagine trying to build an AI model to predict stock prices, but you can't scrape the necessary financial data. Boom. Roadblock. And for website owners, it's a double-edged sword. Sure, you're protecting yourself from malicious bots, but you risk alienating paying customers and stifling innovation. This is a constant battle, and the users are always looking for a way around it. The ripple effect extends further. Web scraping tool providers? They're under pressure to develop more sophisticated tools that can evade detection. SEO and marketing firms? Suddenly, keyword research and competitor analysis become a lot harder. Data aggregators? Their datasets become less complete, potentially skewing their insights. The cost of doing business just went up. Are they spending more money on security? Are they making more money? What are their plans? But here's the kicker: less access to data translates to less market transparency. Companies and consumers have less information to make informed decisions. Innovation gets stifled. And if web scraping becomes too difficult, companies might reduce their reliance on data-driven roles, leading to job losses. This is a dark side of the AI revolution that no one is talking about. This affects us all, and we should be more informed about it. What can we do to stop it? Okay, let's switch gears. The big news: AI chip stocks rise on latest data center spending plans. Nvidia, AMD, their stock prices are going through the roof. Investor confidence is soaring. Data centers are expanding and upgrading to accommodate the growing demand for AI computing power. This is not a drill, people. The AI wave is here, and it's driving the semiconductor industry to new heights. But is it all hype, or is there substance? The immediate winners? Obvious: Nvidia and AMD. Higher market caps, easier access to capital, and the ability to attract top talent. Investors who got in early are laughing all the way to the bank. Data center operators? They're incentivized to expand, but also facing soaring costs. It's a high-stakes game of chicken. If they build too much, they might be left with excess capacity. If they don't build enough, they'll lose market share. It is a lot of pressure. But the benefits don't stop there. Cloud computing providers like AWS, Azure, and Google Cloud? Huge demand for their services. AI software developers? More opportunities than ever to build and deploy AI solutions. Semiconductor equipment manufacturers like ASML? They're printing money. And even the energy sector is feeling the impact. Data centers are power-hungry beasts, potentially driving investments in renewable energy to meet sustainability goals. What is not to love about that? The big picture? Economic growth, technological advancement, and breakthroughs in fields like healthcare, transportation, and manufacturing. But let's not sugarcoat it. Increased automation also means potential job displacement in some sectors. We need workforce retraining programs to help people adapt to the changing job market. And of course, growing AI capabilities raise ethical concerns about bias, privacy, and the potential for misuse. We need robust regulatory frameworks to keep things in check. What are the frameworks and how can we put them in place? Now, let's zoom in on a specific day. Markets news, February 5, 2025. Stocks close higher as Nvidia leads chipmaker rally. Major indexes back near record highs. The S&P 500 is soaring, led by Johnson Controls and Supermicro. But FMC Corporation and IDEX Corporation are experiencing declines. And there's even leadership changes at Johnson Controls and Match Group. The market is a roller coaster, folks. This helps to show how volatile the market can be. So, what's driving these movements? Johnson Controls is benefiting from strong earnings and a leadership change. Supermicro is riding the wave of AI data center server solutions. FMC Corporation is struggling with inventory adjustments. IDEX Corporation is facing missed sales estimates and a soft outlook. And Match Group? Uncertainty reigns due to the CEO change. These are all things that are playing a part in the market, and one thing can affect another. The implications are far-reaching. Competitors of Johnson Controls may feel pressure to improve their performance. Suppliers of Supermicro are seeing increased demand. Other agricultural science companies may need to reassess their inventory management strategies. The online dating industry may be impacted by new strategies implemented by the new CEO of Match Group. And what about Alphabet? Shares fell sharply on weaker-than-expected cloud revenue, overshadowing otherwise strong earnings. Even the giants aren't immune. So why is that? A rising stock market can boost consumer confidence and encourage spending. Positive market performance benefits individuals with retirement accounts. And the availability of capital fuels investment in new technologies and startups. But the challenges faced by FMC Corporation may reflect broader trends in the agricultural sector. And changes in company performance and industry trends can affect employment opportunities. This happens all over the world and can be an issue. Now, let's talk about the risks. Remember that access denied message? The biggest immediate risk is false positives. Incorrectly identifying legitimate users as bots leads to a terrible user experience and potential loss of revenue. And sophisticated bots can always be designed to bypass detection mechanisms, creating an endless arms race. This is a never-ending fight, and the users are always looking for a way to go around it. The AI chip stock surge also carries risks. Is it a bubble? Are valuations overstretched? What happens if demand slows down? We need to be cautious and avoid getting caught up in the hype. Remember the dot-com bubble? History doesn't repeat itself, but it often rhymes. We do not want to see that again. And of course, the stock market is inherently volatile. Inaccurate financial data can lead to poor investment decisions. We need to be vigilant and do our own research before investing in any stock. This is important to keep in mind before getting involved. Finally, let's not forget the ethical considerations. Transparency is crucial. Websites should disclose any potential conflicts of interest. News coverage should be balanced and fair. And financial news should strive for objectivity and avoid promoting specific stocks without proper disclaimers. We need to hold these companies accountable. We also need to consider the ethics of AI itself. Is it biased? Is it fair? Is it being used responsibly? These are questions that we need to be asking ourselves. So, is the AI chip market a boom or a bust? The answer, as always, is complicated. There's no doubt that AI is transforming the world and driving unprecedented demand for computing power. But we need to be aware of the risks and avoid getting caught up in the hype. Do your research, stay informed, and invest wisely. And always remember that technology is a tool, not a magic bullet. It's up to us to use it responsibly and ethically. We need to be careful and aware of what is happening in the world around us. Don't be afraid to voice your opinion. The AI revolution is just beginning. It's going to be a wild ride, full of opportunities and challenges. By staying informed, being critical, and demanding ethical practices, we can ensure that AI benefits everyone, not just a select few. Thanks for joining me today, and don't forget to subscribe for more insights into the ever-evolving world of technology. And remember, stay curious, stay informed, and stay skeptical. We'll see you next time.